Picture this. You're at a bustling international market, surrounded by exotic goods from every corner of the globe. But as you reach for your wallet, you pause. What currency will you use? For decades, the answer has been simple: the US dollar. But is that about to change? Welcome to the Economy Unpacked daily YouTube channel. From Wall Street to your street, we share the world of money in a clear way. Today, we read diving into the future of the US dollar and exploring whether it could be replaced as the world's dominant currency. The greenback has long been the backbone of global trade and finance, used in over 80% of international transactions. It's the go-to currency for pricing energy markets and a staple in central bank reserves worldwide. But recent events have cast a shadow over its reign. Rising U.S. debt levels, high inflation, and growing geopolitical tensions have sparked concerns about the dollar's future. Countries like China and Russia are actively seeking alternatives. While new technologies such as digital currencies are challenging its dominance, so can the USD keep its crown, or is it time for a new global currency to take center stage? To understand where we're headed, we need to look back at how we got here. After World War II, the U.S. economy stood tall as the strongest in the world. The 1944 Bretton Woods Agreement cemented the dollar's status as the global reserve currency, backed by gold. Other nations pegged their currencies to the USD, giving it unparalleled importance on the world stage. Even after the U.S. abandoned the gold standard in the 1970s, the dollar maintained its dominance. This was due to the sheer size of the American economy, trust in its institutions, and the strength of its financial markets. Deals like the petrodollar system, where oil exports are priced in USD, further solidified its status as the world's go-to currency. Fast forward to today, and the dollar's influence is still staggering. It makes up about 60% of global foreign exchange reserves, far outpacing the euro at 20% and the Chinese Yuan at less than 3%. Around half of all international loans and global debt are denominated in dollars. Energy commodities like oil and gas are almost exclusively priced in USD, creating a cycle where countries must hold dollars to trade, reinforcing its global demand. But the winds of change are blowing. Geopolitical shifts are challenging the dollar's supremacy. Groups like BRICS, Brazil, Russia, India, China, South Africa are pushing to reduce reliance on the greenback. Russia and China, in particular, are encouraging trade in local currencies. This de-dollarization effort has gained momentum, especially after Western sanctions highlighted how dependent countries are on USD-based systems. Economic pressures are also mounting. The U.S. national debt has soared past $30 trillion, raising eyebrows about long-term sustainability. Recent bouts of high inflation have weakened trust in the dollar's stability. When the Federal Reserve adjusts interest rates, it sends ripples through the global economy, a power that some countries view as risky. Then there's the digital revolution. Central bank digital currencies, CBDCs, are emerging, with China's digital yuan hoping to bypass the dollar in international trade. Meanwhile, cryptocurrencies like Bitcoin and stablecoins are seen as potential challengers, though they remain volatile and limited in adoption. So, what are the alternatives to the mighty dollar? The euro stands as the second most held currency globally, representing a large, stable economy. However, Europe's fragmented politics, debt crises, and lack of unified fiscal policy make it less attractive as a full replacement for the USD. The Chinese Yuan, backed by the world's second-largest economy, is making strides through initiatives like the Belt and Road, but capital controls' lack of transparency and limited convertibility hold it back from true global reserve status. Cryptocurrencies offer a decentralized, borderless alternative that's appealing in theory. However, their volatility, lack of regulation, and limited mainstream adoption make them more speculative than practical as global reserve currencies, at least for now. Despite these challenges, the US dollar still dominates for good reasons. The US boasts the largest and most liquid financial markets in the world, allowing investors to easily buy and sell dollar-denominated assets. This unmatched liquidity is a major draw. Trust and stability also play a crucial role. Compared to its rivals, the US has strong institutions, rule of law, and relatively stable politics. This makes investors feel safer holding dollars than yuan, rubles, or even euros. Moreover, the dollar benefits from powerful network effects. It's deeply entrenched in banking systems, payment networks, and global trade agreements. Once established, such dominance is hard to displace because it would require building an entirely new global system. Looking to the future, several scenarios could unfold. The most likely is that the USD continues to dominate, but gradually loses some of its share as alternatives gain ground. We might also see a multipolar currency system emerge, where multiple currencies share power, creating a more balanced global landscape. A more radical shift could see digital currencies, whether government-issued or decentralized, replace traditional currencies altogether, significantly reducing the USD's role. While less likely in the near term, it's a possibility we can't ignore. These potential changes have real implications for investors and everyday people alike. If the USD weakens, imports in the US may become more expensive, driving inflation. A strong dollar, on the other hand, makes foreign goods cheaper, but hurts US exports. Globally, fluctuations in the dollar affect loan repayments and trade flows. For individuals, a weaker USD could mean better investment opportunities abroad. It directly impacts travel costs, prices of goods, and even the value of savings in international terms. Understanding these dynamics is crucial for making informed financial decisions in an interconnected world. Many economists agree that while the dollar faces challenges, there's no immediate replacement on the horizon. Most predict a gradual decline in dominance rather than a sudden collapse. In the US, policymakers are exploring ways to maintain dollar strength, including the possibility of a digital dollar. Meanwhile, other countries are actively developing alternatives, adding pressure on the US to adapt. To wrap up, the US dollar remains the most powerful currency in the world, thanks to its deep markets, stability, and global integration. However, growing challenges from debt, geopolitics, and new technologies raise valid concerns about its future. While a complete replacement is unlikely in the short term, we could gradually move toward a multipolar or digital currency system. What do you think? Will the dollar remain king, or will we see a new global currency emerge? Share your thoughts in the comments, and don't forget to subscribe for more insights into global finance. The world of money is changing, and staying informed is more important than ever. Until next time, this is Economy Unpacked Daily, helping you make sense of the dollars and cents that shape our world.